and I'm sure they're going to pay.
Trump is imposing a 25% tariff on nearly all goods from Canada and Mexico, and an additional 10% on imports from China.
Trade tensions between the U.S. and Canada went into overdrive when President Donald Trump announced major tariffs on Canadian imports. His reasoning? Concerns over illegal immigration and fentanyl smuggling into the U.S. Under his plan, all Canadian imports would be hit with a 25% tariff, while energy products got a slightly lower 10% rate. These changes were set to go into effect on February 4th, 2025. True to form, Canadian Prime Minister Justin Trudeau didn't just sit back, he hit back. Canada responded with a 25% tariff on $30 billion worth of American goods, with plans to expand it to another $125 billion after a public consultation period. And what made the list? Some American favorites: beer, bourbon, fruit, juice, clothing, sports gear, and home appliances. Just as things were about to escalate, Trump and Trudeau struck a temporary deal. Both sides agreed to hit pause on the tariffs for 30 days. In return, Canada pledged to beef up border security, appoint a fentanyl czar, and team up with the U.S. on a joint task force to combat drug trafficking. While some of these moves had already been in the works, reactions in Canada were mixed. Many worried about the economic impact, with experts warning of rising prices, disrupted supply chains, and potential long-term damage to the U.S.-Canada trade relationship. Negotiations are still ongoing as both sides look for a more permanent solution before the new deadline. Meanwhile, Canada is rethinking its oil export strategy. With trade ties to the U.S. becoming more uncertain, Canadian producers are looking east, specifically to Asia, with China leading the way. Pipeline operator Trans Mountain expects an uptick in demand for its system if the U.S. tariffs take effect. The Trans Mountain pipeline, which moves crude from Alberta to Canada's Pacific coast, has been running at about 80% capacity. But if the U.S. market becomes less favorable, expect more of that oil to flow to Asia. The expansion of the Trans Mountain pipeline, which went online in May 2024, tripled its capacity to 890,000 barrels per day. This move gives Canadian oil producers more flexibility and reduces their dependence on a single market. Asian refiners, especially in China, Japan, South Korea, and Brunei, have already been securing deals. In September 2024, Chinese refining giant Rongsheng Petrochemical snapped up multiple shipments of Canadian crude. So why the shift toward Asia? 3 big reasons. Diversification. Less reliance on the U.S. means fewer risks tied to trade disputes. Market demand. China and other Asian nations need heavy crude, which Canada produces in abundance. Better pricing. Asian markets offer higher returns, making the shift financially attractive for Canadian producers. But here's the irony. Canada is pushing hard to be a leader in climate action, with a nationwide carbon tax and heavy investments in clean energy. Yet at the same time, it's expanding oil exports. The Trans Mountain pipeline has become a symbol of this contradiction, drawing criticism that these projects undermine Canada's climate goals. Striking a balance between economic growth and environmental responsibility remains a challenge. Canada is a major player in the global oil industry, ranking among the top producers. As of 2023, here's how it stacked up against the world's biggest oil suppliers. The U.S. led with 12.91 million barrels per day, 22% of global production, followed by Saudi Arabia at 9.7 million barrels per day, Russia at 10.1 million barrels per day, Canada at 4.6 million barrels per day, and China at 4.2 million barrels per day. Together, these 5 nations account for over half of global oil production, with an estimated 180 billion barrels in proven reserves, mostly in Alberta's oil sands. Canada remains a heavyweight in the global energy sector. Oil exports are a cornerstone of Canada's economy. In 2023, exports hit a record 4 million barrels per day, 81% of total production, and nearly all of it, 98%, went to the U.S. This deep integration in the North American energy market underscores just how interconnected the two economies are. Beyond oil, Canada's exports are diverse, contributing significantly to its GDP. Some top categories include mineral fuels and oils, $43.4 billion in 2023, vehicles, $63.68 billion, machinery, $42 billion, In technology and electronics, $16 billion. The U.S. and Mexico are key buyers thanks to trade agreements like CUSMA, formerly NAFTA. Canada and China have also built a substantial trade relationship, with China ranking as Canada's second-largest trading partner after the U.S. In 2022, trade between the two nations totaled $87.5 billion, with Canada exporting $25.4 billion worth of goods to China, while importing $62.1 billion, leading to a $36.7 billion trade deficit. Canada's top exports to China included oilseeds and canola, 3.84 billion oz, iron and copper ore, 3.58 billion, coal, 3.04 billion, wood pulp, 2.3 billion, and cereals like wheat and barley, another 1.49 billion. On the flip side, Canada's imports from China hit a record high 100 billion Canadian dollars in 2022, up 16% from the previous year. Consumer goods, 31 billion Canadian dollars, and electronics, 28 billion Canadian dollars, dominated the list, reinforcing China's role as a key supplier. Now let's talk about the elephant in the room, Trump's take on Canada. In December 2024, during a Mar-a-Lago meeting with Trudeau, then President-elect Trump floated the idea of Canada becoming the 51st U.S. state. He even joked about calling Trudeau Governor Justin Trudeau of the great state of Canada. By early 2025, things got serious. Trump doubled down, claiming on social media that the U.S. was unfairly subsidizing Canada and that the country would collapse without American support. His administration pushed a 25% tariff on Canadian goods, with a 10% rate on energy, citing immigration and drug trafficking concerns. Trump also took jabs at Canada's military, calling it very small, and falsely claimed that U.S. banks were banned from operating there. Fact-checkers quickly debunked this, noting that American banks like J.P. Morgan and Citibank have been active in Canada for decades, operating under Canadian regulations. Another controversial issue, fentanyl. Trump alleged that Canada was a major source of fentanyl entering the U.S. While some fentanyl production does occur in Canada, the vast majority comes from Mexico, where cartels manufacture it using chemicals from China. Data shows that most fentanyl smuggling happens through the U.S.-Mexico border, not from Canada. That's a wrap for today's breakdown. If you got value from this, do us a favor. Hit that like button, drop a comment, and subscribe for more updates. Your support means the world to us. Stay tuned, and we'll see you in the next one.